Hello and welcome to our daily market analysis, where we deep dive into 28 different charts to bring you the latest in stocks, indices, commodities, Forex and crypto. If you're looking to stay ahead in the trading and investing game, you're in the right place. Don't forget to smash that like button, subscribe for more insights and ring that notification bell so you never miss out on this expert analysis. Let's run the numbers. If you've ever bought at the top and sold at the bottom, you know how important market timing is, and we have a free printable template at ctksmethod.org. You can pop across there and get one of these sheets that you can fill out yourself. In yesterday's markets, over the past 24 hours, we saw two things come into play: strength in the DXY and weakness in the yields. The different coloring on the boxes represents Tier 1, Tier 2 and Tier 3 charts. Tier 1 charts are vitally important to understand. These are the engine of financial markets globally. All markets and therefore charts are intercorrelated and interdependent. If pressure comes off the yields, that's going to drive performance inside crypto and the stock market. If the DXY strengthens, we would expect weakness in the euro dollar and also the Aussie dollar. The combination between charts will drive the VIX and junk bonds, which will give us some indication of risk on or risk off activity. What we saw in the main markets, pressure was coming off the US 2-year yield that went from a basic consolidation stance into a negative one, and the US 10-year is under a lot of pressure. That put some much needed breaks inside gold's descent. It was coming back, but silver and copper have been doing quite poorly recently after massive runs up. US oil is still under a lot of negative momentum, both on the monthly trend and also the current trend. You can see this is the monthly, this is the current, monthly and current. The probability of a rate hike at the next Fed meeting is currently 0%, and that's about a week away. There's a 99.9% probability of no change, 0.1% probability of a rate decrease. The ISM Services PMI came out slightly stronger than anticipated. Any reading over 50 indicates economic expansion, and that's what we're in right at the moment. The JOLTS job openings report previously was 9.553 million. They expected 9.3. They got 8.73. This indicates a cooling labor market and therefore no need to hike rates. This is exactly what put the US 2-year and the US 10-year under pressure, and gold, stocks and crypto breathed a sigh of relief. We're going to look into the S&P 500's price action under CTKS structure. It's very important to understand. The S&P 500 was incredibly positive. It's just come down to weekly positive at the moment, but it's still positive. We're going to look into the structure of that in the upcoming step 2. We saw Apple absolutely go for it. It's become really strong. Microsoft also went for it. This is the power of the yields coming down, something to be very aware of. The Nasdaq slightly improved, but it's still under consolidation. And Tesla started to put in a bit of a rain, as in did Nvidia. The crypto market was on fire. When yields come down, that's a really good sign at the current time for crypto to rally. The markets love to surprise us. They're always changing character. What's good at the moment could be different 12 months from now, so please just be aware of that, or even 2 months from now. That's why we need to do our market timing cheat sheet to see how things are pushing along. Bitcoin has just been under such positive momentum. But when we look at crypto fear and greed, it's 75. It's not overextended, and the stock market's fear and greed is not overextended either. This tells us that there could be more upward price momentum. Looking inside the crypto market, we can see total crypto market cap has been outperforming. It's been doing so well. Bitcoin is also outperforming. As Bitcoin and total come up, it's going to pull ETH up directly. We've seen improvement in BNB and XRP, but XRP is not as improved as we would like to see at the current time. Solana is quite consolidating at the moment, but still has upward positive pressure on price. ADA has been doing fantastically, as has Doge. Litecoin and Bitcoin Cash are both performing well. With market timing, we don't need to hope and we don't need to pray. We just need to know where the structure is so we can buy on red and sell on green at a targeted ROI that is eye-watering. There are so many ways to buy and sell, and here we're looking at Doge, and we can see Doge, the sells on Doge and the buys on Doge. This is all structurally dependent buying and selling. Here's another example with Cardano, ADA. You can see buying on red is a very uncomfortable thing to do, but that's how you sell on green. Typically, what most people do, they increase their risk as prices are going up, and the likelihood for a retracement is always ever present. You can see price is simply just moving in a wave. The key to financial success is an annualized return on investment, which is very different from your absolute ROI. For example, if you had a $500 investment and you made $550 back, you had a 10% absolute return on investment. But if you could do that in a daily basis, have a look at the gross annualized return. It is way above 10%. In order to get big X's, you don't have to actually get and hold on to big returns. You can just turn over a lot of small ones, and that's what you see me doing each and every day. All of those little red arrows that I showed you are very eye-watering gross annualized returns on investment. I'd love to hear from you in the comments below. Please share your thoughts on today's analysis, any charts that particularly caught your eye, or any queries that you might have. Traders are very good at market timing. They need to be. My routine is I look through the Tier 1, Tier 2 and Tier 3 charts. I know all markets and therefore charts are intercorrelated and interdependent. I solely trade crypto, but that doesn't mean I can ignore the main market. I must look at where the yields are going. I need confluence with gold and silver. I need to understand if the DXY is strengthening as reflected by the euro and the Aussie dollar. Also, the Japanese yen typically throws a lot of light if the DXY is expanding or contracting. These macro factors are what we use to understand in-market factors, that is, how our targeted investments and trades are performing. It will take some time to get used to your market timing, so don't worry about it, just be kind to yourself. As you go through, you'll see more and more interdependencies revealing themselves, and you can get this free downloadable printable template that's just got blanks here that you can fill out at ctksmethod.org. The secret is the CTKS structure. That's exactly how I do my trades. CTKS structure is available as an indicator on all the Tier 1, Tier 2 and Tier 3 charts from the ctksmethod.org. One thing that I look for is a specific chart, especially a Tier 1 chart, such as the S&P 500, below structural resistance, or is it above structural support? We can see the S&P 500 has been stopped out at around that 45.90 mark. It's trying to get through this structural resistance at the moment. It's precisely because of this structural overhead resistance in the S&P 500 that we're seeing yields normalize as well as the DXY. All these charts are intercorrelated and interdependent, and when we look at a specific level of structural resistance, it's not just a line drawn on a chart, it's a standards-based method that's analyzing more than 55,800 days worth of data to find a smart money line or an SL. These SLs or Stanfield levels tell us where smart money is buying and selling. They're scarily accurate, and we've been proving them out for years. Thank you for watching our market analysis. If you found this information valuable, please show your support by hitting that like button, leaving a comment with your insights, and subscribing for more daily updates. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.